Ah, yes, the Fed, they giveth, but they can taketh thee away. In today's Stock Market Brief Show, we're going to talk about how to play that bullish reversal we saw. And I'll even give out another trade idea here. What took place today? Well, Fed Bostic touted the summer pause, and all of a sudden the market rallied. When you take a look at the meeting probabilities for the federal funds rate, you can see here we're still looking at a 25 basis point in March, in May, and also in June. The probabilities say 25, 25, 25, but yet there's also probabilities here kind of gaining steam for a 50 basis point hike, which we need to watch out for. And then we have that pause there taking place. We also have the Fed still continuing to tighten, right? We know that the more that they tighten, it can add a liquidity, which causes more volatility, which we've been seeing. The market raised today, even despite seeing the 10-year yield get back above 4%, which we haven't actually seen since November. And also, the dollar was up on today's price action as well. So, it was really the Fed. They giveth. But remember, they can step in and they can take it away. So, it's going to be very, very important on how we can play this price action to see if we can get a bounce out of the S&P 500. Now, this was today's price action. I'm going to show you how I played intraday today, okay? First and foremost, this blue line is the daily VWAP. The orange line has been the month-to-date anchored VWAP, which I've been tracking since one day ago, right? Because March 1st, today's March 2nd, but it's an important one to keep on the screen. And as you can see here, you can see the price action was choppy at the beginning, but you can see the daily VWAP was holding. Daily VWAP, VWAP, whatever you want to call it, okay? And as you can see, the bulls were making progress into an inclining daily VWAP, and you can see higher lows. And then you can see there was this strong kind of point right here where the bears were holding steady. And what was that point? Well, that was the month-to-date anchored VWAP, okay? And you can see here as price started coiling up tightly, this is all happening before the Fed came out, and then boom, right? As soon as we got that news, we saw an explosive move outside of that month-to-date anchored VWAP. Now, that's not the move that I took, but I'll show you here where I actually executed that trade. I executed the trade on the pull back to the month-to-date anchored VWAP, and then it started showing strength, so I entered in at 151 and 47 seconds Eastern Standard Time, which is basically right before this green candle, and got, I didn't know that this was going to happen. This was just lucky, but that's how I entered in long to get some exposure. And now, if you missed it, it's not too late. We'll discuss it right here on the daily time frame. Now, why are we calling this a bullish reversal? Well, it's because of this candle. This right here is an outside or a bullish outside trading day, bullish engulfing, all kinds of names. But basically what it shows us that the day started pretty bearish, right? We gapped down, which, causes some fear. However, the market didn't really go much lower. It went from red to green, closing near the high of the day. And if we take that into consideration, just price action alone, that's pretty bullish. But now let's take some more things into consideration. They found support at the lower area of this channel. They found support at the 200-day moving average. They found support in the golden zone, which is a 50 to 61.8% retracement zone from this low here to this high here, and you retrace it down into here. Okay, so this is looking like it potentially has some power to go. But remember, this is all coming off of just a couple of words that the Fed said. So if that changes, why couldn't it just be taken away from us? So how do you play this? Well, you have a stop under this area, right? So if you want to go long, you think that we're going to get some more movement to the upside, that's always a possibility. So you go long. But remember, there's a year-to-date anchored VWAP just above us, which can act as a potential level of resistance. And then we also have the anchored VWAP, which I don't have on my screen right now. I apologize, but from the all-time high, which is roughly right around this area. So if price does get a move and we get through the year-to-date anchored VWAP, this might be a potential area to watch, which is right around that 410 level. But remember, if we take out the low of today's trading day, that could be quite bearish overall. So that is what I'm watching going into the remainder of this week, which is tomorrow, and then into next week. Now, this is the S&P 500. I'm going to show you the bullish percent index. The bullish percent index is telling us, the percent of stocks that are on buy signals based off of point and figure charts. If you don't know point and figure charts, that's okay. They're the ones that look like tic-tac-toe boards, right? A bunch of X's and O's. All right, and it's basically telling us right now 47% are on buy signals. So it just crossed down through 50. So it's telling us that, hey, less than half are on buy signals. And what you can see here is the RSI, it's getting to that oversold condition. Now, I like using the RSI to tell us, hey, look for bullish divergences, negative divergences, and it kind of rotates from overbought to oversold. And it tells us when potentially we might see a change in market direction. And as you can see here, we definitely were calling this out a bunch of times, along with some other indicators I'll go over. It was getting overbought. And what do you know? The market kind of stalled out here, which means it could consolidate through time or price, and we started pulling back. Okay, now we're getting oversold conditions, which tells us what? It tells us, and remember, oversold can stay oversold for a while, blah, 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 blah. It's telling us that, hey, we might potentially see this consolidate, or maybe take a little bit of a breather, or potentially start bouncing a little bit to work off these oversold conditions. That is the possibility. Now, if we look into the 15-minute time frame, you can see here, just looking to the left of the screen, despite seeing that bullish price action back through that month-to-date anchored VWAP, and holding that daily VWAP today, we're just actually coming into a downsloping trend line right here. So if we start breaking through that, we can come test this year-to-date anchored VWAP, maybe look for a back test, potentially something like that, and then maybe, hey, we can start putting in higher lows, and we start breaking out to potentially come test out that upper weekly expected move. That would be the bullish case scenario. A bearish case scenario would be getting what? It'd be taking out this low from today. Okay, that would be the bearish scenario, and then it opens the door for what? This lower weekly expected move. So as it holds the month to date, right? Even if we get a move all the way back down, that could be an opportunity to do exactly what I did today, right? What did I do today? Well, I look for the back test, I look for some strength, and then I said, okay, I'll go ahead and take a spot, and I'd have a stop here intraday, but I'm looking, this was more of a longer swing trade, and I zoomed in on the intraday chart, right? So it depends on how you play it. So I'm playing more as a swing trade, so my stop is going to be just down here. And if I get stopped out, it is what it is. But if you were doing intraday, right, you wait for that strength, and then you say, okay, now I can potentially take that shot and potentially see something like that take place again. It's a possibility. Now, as time progresses and price action moves higher and volume increases, the month-to-date anchored VWAP can start curling itself up. So watch for potential back tests for that also as a possibility. Now, a couple concerning things here is if you take a look at the 11 sectors that make up the S&P 500, take a look at what's at the top. Utilities, consumer staples, those are more defensive sectors that were the leading performers. So as it stands now, yeah, everything was up except for two, right? And remember, the financials were down like almost 2% intraday. They are 1.5 or 1.6, something like that. And they rallied all the way back. So probably see a big hammer candle there. I haven't looked at the chart. But these right here, are more defensive sectors. And if we start outperforming the S&P 500 from a relative standpoint, that could be somewhat of a warning sign. It's a potential warning sign, maybe not too big to look into as of this moment, but it is something that we want to continue to track. So that is one thing. The next thing here is the summation index. We're still at a parabolic SAR that's above our summation index, and it's still pointing down at this time. From a positive standpoint, we have a positive divergence on the Nasdaq-McClellan oscillator. As you can see, the internals are strengthening, still negative, but they're strengthening higher lows, where the price action put in lower lows. So price action was moving down, the internals were strengthening, which could indicate we might see a bounce. We've seen that here, we've seen that here, we've seen it here. I mean, we've seen it multiple times throughout this type of chart. The same thing here goes with the NYSE summation index. It's the same type of chart where you have the NYSE summation index and you have the NYSE-McClellan oscillator. It's just on a different index product, a broad market index. And you can see here we have that positive divergence right here on the NYSE-McClellan oscillator. We have higher lows, lower lows there, and we still have the summation index pointing down as it stands. Now, before I get into the trade idea, if you guys like this type of content, this is one way to support the channel. It's $9 a month, or you pay annually, it's $90, and you get access to more content. This is the Discord channel, so you sign up through Patreon, you sync your Discord up, and then you get access to trade ideas where I post a bunch of different charts. One I'm going to share with you here. I give weekly expected moves. Those are, I track 40 products. I do the work for you. I give out zones. Zones are an indicator to help with managing risk or seeing where the overall markets may be in from an oversold, overbought condition. And then I also give out permalinks to my stock market indicator charts that I share here on this show. And then best of all, you get access to the community, which we have, a couple thousand people in there. We have a bunch of active people, and a lot of people share their own trade ideas and setups that are very cool. So, really good setups. Now, the one that I want to talk about is CELH. This is a consumer staple. So the reason why I'm showing the consumer staple right now is we saw that relative strength today. So if we are going to see consumer staples start to outperform the S&P 500, this may be one to watch. This is a highly volatile stock, okay? Meaning that just today, it moved, it was up $5.63 per share, and it moved more than that, right? We came down to 85 and we closed up at 95. So that's a $10 per share swing. So if you take trades like this, make sure that you're managing your position size effectively. But what am I looking at here? This is a very similar thing to the S&P 500, but it's giving a little out more juice. You have that bullish engulfing candle. It's a monster one. Big gap down, probably scared a lot of people out of the gate, and then we close near the high of day. So, and by the way, this is in this falling wedge structure, and this big bullish outside trading candle happened to be on more volume than we've seen really since November, early November, which is over here. And if I actually, this is on the fly actually now. If I go straight up, boom, right around here we saw that volume. And if you take a look here, what happened? Price went up. Well, guess what? Price came right down here, and we're seeing volume step right back in. So this is interesting to me, as this could be a potential area where we see institutional type volume come in to this. Now it's, that's more of a narrative, but it's possibility. So how do you play this? Well, one way to look at this is as we recoup this 200-day moving average, I would just say you can go long. Where can we potentially go to? Well, let's go try to test this previous high or even break through it. And then we have this stop that would be underneath the low of today's trading candle. If it starts breaking that, that could sign a little bit more of a warning sign, just very similar to the S&P 500. On a good note, we also had that MACD bullish crossover here taking place. This relative strength line is starting to try to break out of this, so we'll see if we get some more relative strength here too as well. But that is something that I'd be keeping an eye on. Hope that helped out in today's episode, everybody. Have a wonderful one. Remember, we got to focus on managing risk. If these areas are broken, be aware, be on guard. But as it stands now, that was, right, a bullish type price action because the Fed giveth. But remember, the Fed could step right back in and take it away. See ya.